All right. I welcome everyone. Good evening, everyone. I welcome you guys to today's class. I think we'd have to start over again because yesterday our live got messed up. So our live got really bad, and the network disappointed us. So thank God we started early today, and hopefully before the network start messing up, we've achieved what we want to achieve. So let me go to his clean slate first. Then I'll explain, then continue from where I stopped yesterday. So today we are going to be talking about valid zones. And what I said yesterday was um, the definition of valid zone is a particular area or a zone in which we expect the market to react. We expect the market to react and give us either a buy distribution or a sell distribution. So a zone can either be an imbalance zone, it can either be another block zone, a demand zone or a supply zone, or it can also be a breaker block. If you're having difficulties with understanding what these terms are, you can go to my previous videos, you can go to my old videos and check them out. So for you to actually know which of these zones will hold is to actually check some features regarding them. Check your confluences, check the psychology and the logic behind the whole market structure. So what I meant by psychology and the logic behind market structure is that, for example, For example, according to what I thought, I said, okay, the market goes creates higher high and higher lows, creates higher high and higher lows, creates higher high and higher lows, then changes character and starts creating lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. This is our market structure. So now, um, in the market, our goal is to identify either when the market is going up or down, and we should identify where the market will reach before it starts going up or down. Wow, a lot of you guys. Can you guys hear me? If you can hear me, please let me know. Someone said he can't hear me. So if you can hear me, let me know. If you can't, let me know so that I'll know how to check my settings. So ah, a lot of you can hear me. It's only one person that said he can't hear me. So it seems like it's from your own network. Oh. So I think we should proceed. You get the recorded version, so don't be too worked out about it. Don't be too worked out about it. You definitely get the recorded version, so don't be bothered a lot. Don't worry, just try to follow along.
Mama, I can't hear what you are saying.
Ah, you can't hear what's like. Oh boy, you can't hear what I'm saying. Ah, oh. You guys should tell him to go out and go and just try going out and relog in again. Just tell him on the group to relog in or just exit and enter again because that's the only way. Let me try typing it there. Uh, All right. Let's just proceed. Let's proceed. He's going to exit and log in back again and come up again. I think it's going to work after that. Okay. The major goal is to either be a seller in the market or the buyer in the market, and what we are interested in is the zone. How to know the zone that we hold, because there are a lot of other blocks and there are a lot of fair value gaps in the market. So for you to be able to know the valid zones, I said yesterday, you need to have the knowledge of premium and discount, which is a logic that all of us are aware of right now. So you must know the logic behind premium and discount. So now, as you can see, the market was trending upwards around it this in this um, market. In this market, it was going up, then reverses and goes down to the demand zone and tag into the demand zone. So what you should look out for when marking out your zone, aside from premium and discount, is understanding valid pullback. Understanding valid pullback. So aside knowing premium and discount, which we know that okay, we are going to be buying when it's at discount and selling when it's at premium. You need to buy when it's at discount. You shouldn't be having issue with premium and discount, sha, but I assume that you shouldn't have issue with that. But let me still just sketch it out while I'm explaining, so that it will be easy for you to understand. So let's say this is premium stroke supply zone. Then this is discount stroke demand zone. And the psychology behind it is that if you want to be on the good side of the market, wow, I can't see your screen. Can you guys see my screen, or it's only him alone that can't see the screen? Let me know. Can you all see my screen, or you can't see my screen? Let me know, because it seems like ah
I can,
they can see you.
I can,
What is going on? Try
I can
try
hear.
exiting your Telegram. Exit your tele, cause me I don't even understand. Let him exit into his Telegram and enter again, cause I don't understand. Everyone can see me and hear me, but he can't. So now, for those people that are struggling to know what is premium and discount, this is it. When the market goes up, is at premium. It's simple English, yeah. I assume that when they say something is at premium, when they say something is premium enjoyment, that means it's expensive. When something is premium, it's expensive. When something is at discount, it's cheap. And in this market, you can either be a buyer or a seller. So the most sane thing to do, or the most logical thing to do in the market, is to buy when the price of assets has gone down, and is to sell when the price of assets has gone up. So um This is a premium and discount. When the market comes up, you sell. When the market goes down, you buy. Alright, there are signs you should see. There are signs you should see to validate your zone. Signs you should see to validate your zone. When your zone is going up, I would advise you to look out for something. The first thing you need to look out for is your break of structure to the upside. When you see a break of structure to the upside, then you tick it. Okay, let's just do a list. Let's just do a list. Let me write my list here. BOS, then let's say liquidity. Liquidity can be the liquidity can either be inducement liquidity, it can be engineered liquidity, whatever liquidity that you want to make reference with. Then you should see a valid OB, or let's just say OB. Then you should see an FVG and a breaker block. So in fact, or we should also see a mitigation block. Mitigated block. You can also, if you want to take it further, you can also see an inverse fair value gap, inverted fair value gap. Yes, this is few of the confluences that validates your zone. So for instance, now let's go back to our, let me see if I can shift here. All right, so as the market goes up and breaks structure and still goes up, breaks structure, breaks the first structure and breaks the second structure. When you see the market breaks a first structure and breaks a second structure after going down, and again, just note that when the market breaks the first structure, it's expected that there should be a pullback or reversal. So when this reversal occurs and it doesn't tap into your order block or your discount zone or your demand zone, then it's a plus for you. It's a good sign. It's a good sign. So now when you see a BOS, let's mark it BOS check. So BOS check, BOS check. Then what else? Let's be using let me just leave it. So BOS check, then liquidity, because when you see that the market doesn't tap into your demand zone but still jumps up to create a new break of structure, that means a liquidity has been created. So for those people that don't understand me, then I think you haven't watched my video regarding liquidity. You need to still go back and watch. But for those who have watched my video should understand this. So the first break of structure, then the second break of structure, then what? We expect what? A sweep of liquidity. A sweep of liquidity, which is this. So I'm going to be making the sweep of liquidity a dashed line or dotted line. So this is signifying a sweep of liquidity. Then what? We expect the market to come to our valid zone. So now, before then, you should be able to see more confluences that validates this zone. Something like liquidity, which is one, that's the second break of structure, which is one, then liquidity, which is two, Then what again? Then probably a fair value gap near our order block, because most times if you want to actually know that you want to know whether an order block is valid or is going to hold, is when you see something like a fair value gap before the order block. I've spoken about this the other time. If you see a fair value gap, if you see a fair value gap before the order block, then it validates that you are in the right zone. So when you see something like this as a fair value gap here before the order block here, then you should know that you are in the right zone. So when you see fair value gap, then to make things more um, to make things more fun and more to make the zone more stronger is to actually see something like maybe a breaker block or mitigated uh, block. You get, or mitigation block, either a breaker block or mitigation block. Then it solidifies your zone more better. So it makes your zone more valid. So it solidifies it much more better. So when you see a breaker block or a mitigated block, mitigation block, then it solidifies this zone. So the more confluences you get, the more valid the zone becomes. And again, don't discard your um, idea on premium and discount. Don't discard your idea on premium and discount. Same thing goes to your supply zone when you are selling. Same thing goes to that. Make sure that your order block is having a fair value gap. Aside from it being having a fair value gap, the fair value gap should be having order block should be having a fair value gap. Aside from fair value gap, if you want to look for more confluences, you should have probably a aside from ticking your break of structure, liquidity, and fair value gap, you should have maybe probably a breaker block. You get, is a breaker block is an order block that has been invalidated. And when you see something like that and you see that okay, there is a fair value gap and also there's a new order block zone there, then should give you an upper hand to take trades from there. Should give you the confidence to take trades from there. So I think let's try and see if we can get an example, because I've been talking too much. I've been drawing a lot of lines. Let's go to the charts and I'll show you some few examples. Although I've not even checked my charts, I just see make I just follow the flow. I wanted to just go with the flow. So we are all going to check the charts together. So let me check. Let me delete all these things first. Then we check the charts for a few examples. Then we can dismiss. At least the network is behaving. It's behaving itself today. I'm very happy. Let me see whether I'm still recording. Yeah, I'm still recording for the benefit of those that are not around. So let's look for an example. I think that's what we need right now. Not too much noise. Let me show workings. Should I use BTC? BTC is somehow crazy. It's somehow crazy because most of BTC's price action is just too rough for my liking. So I don't know whether I should use BTC or I should use I can use BTC actually, but yeah, let me just use BTC. I will also use Euro USD and gold. Let me use the three basic assets. Let's see. Mm, let's search. If you see my chart, you easily identify themselves straight up. Let's see. I think this one will give us what we want. Even this one as well. Um. Okay. We are on the 4 hours. We're on the 4 hour time frame, and I'll try and show you different example using different time frames. So I don't know whether I should go for one day, then let's go after looking at one day, then we'll look at 4 hours, then we look at 1 hour, then we'll leave this pair and go to another pair again. So that you guys will know that okay, this thing works on different time frame, different hours, different pairs. It works everywhere. So now let me show you something. As you can see, it's very visible. It's very, very visible. But it's just that sometimes there's something I told someone. I said, regarding these classes I made, sorry, regarding this premium and discount, this ICT, SMC models and all these things, you need to also know that every pair have its own specific price action, has its own way of behaving. Every pair has its own way of behavior, regardless of premium and discounts and all these other blocks. Some pairs are quite stubborn. They tend to disregard some kind of what will I say, pre-existent laws or something. So let's just dive in, Jerry. I'm speaking a lot of English. So now, what's happened here in our one day, our daily time frame? According to this price action, you can see it's quite rough, but it went up. See what it did from here. Went up to this place, then went again down, then still went up. Sorry, before then, I'm coming. Oh, I'm coming. This is what happened. Then after I did this, I'm coming. Let me explain this thing better. I'm coming. Yes, I want you guys to see it properly. Yes. So now, let me delete this one. So now let's see this thing now. What happened? The market was trending upwards. Boom, 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 boom. Higher high, higher lows, higher high. So for those people that have eyes, should already spot our model. The model I've always been talking about. Break of structure, sweep of liquidity, tap into a valid zone, then boom. So now what you should look out for on something like this is the first the break of structure. So just keep in mind the break of structures. Let's just be marking out the break of structure first. According to our list, we see the break of structure. How I wish I still had the list to Jesus. Let's just move. We say break of structure, then what? Sweep. We haven't seen any sweep of liquidity or anything. So let's just look at another break of structure. Break of structure. Boom. So here's the break of structure. Then what? The market did what? The market reversed. The market reversed to the downside after creating liquidity over here. So let's mark the liquidity. And again, for you to be able to know a valid liquidity or inducement, it needs to break structure. Please keep in mind, for you to be able to know a valid liquidity, you need to break structure. Please, it should break structure first before you can qualify it to be a valid inducement liquidity, because there is something we call engineered liquidity. We haven't even reached that stage yet, but yes, in terms of inducement liquidity, it should break structure before um, you can refer it to as a valid liquidity, inducement liquidity. So let's go. After it has broken structure, we created the liquidity here, which is the low of this high that was broken. Then let's mark out, we'll mark out our liquidity. Let's mark out our fair value gap according to our list. Say fair value gap. Where is our fair value gap? Our fair value gap is here. Let's mark out our fair value gap. For those people that don't have eyes, let me show you. Let me zoom in again and show you well. This is our fair value gap. Let me use, aside from using rectangle tool, let me even use this thing for you, because it seems like this simple stuff are giving you hard times. You guys, I'm quite disappointed in you guys. You guys should be able to grow past this stage by now. So this is it. This is it. This is it. So this is our fair value gap. You can see, guys, you can see it now. This is our fair value gap. Clear according to our model. I'll show you this thing happens in every time frame. Happens in every time frame, happens in every pair, regardless. Even in crypto pair. It's just that sometimes you can't get all the confluences, you can't get everything in one trade. So, but you should be able to see one or two. So now, just place it here, your rectangle tool. You've marked out your fair value gap. Good. After marking your fair value gap, what else? We said we should look out for our order block. So now, let's look out for our order block. Where is it? Our order block is mostly the last negative candle or positive candle, depending on the demand or the high or the supply zone. So let's say the market is going upwards. That means it's positive. Then if the market creates a candle that is going downwards, it's a negative candle. That's why I called it a negative candle. You can call it a bearish candle, you can call it a negative candle. So now, this is our negative candle before a bullish candle that broke structure and again have a fair value gap above it. So it also has two fair value gap. If you can see, there's one, there is two. This is the second one. This is the second fair value gap. So you can see there's a lot of confluences. And again, I said something. I said if you are very attentive to price actions of different pairs, you know that every pair or asset has its own character. As you can see now, BTC refused to tap into the 50% consequent encroachment of our order block. Let me just name these things for you. I'm coming. OB, then FVG. So if you are someone that treats BTC well, if you trade it a lot, you know that when you see zones like this, when you have double fair value gaps, it's expected or is advisable for you to enter your trade Since you are having double fair value gap and you're also having an order block, it's expected for you to enter your trade from the first fair value gap, which is this one. The first fair value gap, which is this one. Then what? You extend your SL, your stop loss, to maybe this low. Extend your SL to this low, because according to BTC now, BCC and gold mostly respect breaker blocks and fair value gaps. So now we've seen our fair value gap, we've seen our order block. What else do we need again? According to that list, I don't know whether you guys are still following. According to our list, we say we need what? Break of structure. We need what? Sweep of liquidity. And what again? We need, very soon I'll start unmuting your mic so that you guys will start answering me, so that I'll know whether I'm not talking alone. I'm not talking alone. So I want you guys to be following. So now we need breaker block, fair value gaps, and so on and so forth. So we've gotten what so far? We've gotten a break of structure. We've gotten two multiple break of structure. We've gotten sweep of liquidity, which is this one. LQ, LIQ, liquidity, or you can just use it as you can just use a dollar sign instead. So after that, multiple fair value gaps. Then what? Breaker block. We've not identified breaker block. So this is our breaker block. Another block that has been invalidated. So where should we mark? Let's mark this place. Till you go to the lower time frame, you understand, you see them visibly. So it's also in the same zone. So you can see that this zone is very strong. You can see that this zone is very strong. Very, 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 very strong. So when you see your breaker block, you see your other block, you see your fair value gap, then you are good to go. What you are going to be doing is just to put your long position here. In fact, I'd advise you from here. Put your long position. Then your SL should definitely be here. Then what else? You target the previous high. You target the previous high. You can see a clean, this is a clean trade. A very, very clean trade. Very, very clean. We are using our daily time frame. So we can go to, this is our daily time frame, and this is a very, very clean trade. Very clean trade. So let's look for another example. This is like, I think it's like a 1-to-4 ratio. 1-to-4 ratio, real risk reward ratio. So this is 4RR, the 4 risk to reward ratio. So let's see. Let's use 4 hours, 4-hour time frame. So in our 4-hour, let's try and see whether we can get a similar kind of model. Let's look for our 4 hours. Yes. I like this. Immediately after you've seen that of the the 1 hour, here's the 4 hours. But I think we should just look for another one. Let's look for another one. Let's look for something like this. Yes, I think I like this one. Before the rough market, look at how good this trade is. I want to explain something, that's why I choose this one. I chose this one because I want to explain something. So, according to this trade now, according to this particular trade, the market did like it wants to go down, then what started going up, creating an order block here. Then what fair value gaps, multiple fair value gaps, multiple fair value gaps. So what the market did was I'm coming. Yes. All right. All right. So on our 4 hours, the market book structure, in fact, changed character on the lower time frame, something like this. Change character here, change character, created multiple order blocks like this. This is how to mark out your order block, your last negative or your last positive candle to either the upside or the downside. So now it has broken structure, then broken another structure again. And mind you, according to our list, we say we need what? At least 2 break of structure. And the market has given us 2 break of structure. What else again? We expect what? A sweep of liquidity, which is this one. This is a sweep of liquidity. What else do we need? What else do we need? After a sweep of liquidity, we need the sweep of liquidity to land where? To land in a fair value gap. This is our fair value gap. This is our fair value gap here. Our fair value gap is here. The whole of this place is a fair value gap from here to here. From whole of this place. Although it has been mitigated at first when the market broke structure the second time, but it wasn't mitigated like totally. So there is like still a space here, an imbalance here. So, and we're expecting after a sweep of liquidity, it should tap into our FVG. So here's our FVG. Then here's what? Our order block. You can see that it's the same thing that is happening in the lower time frame as well. So our OB, our fair value gap, and what happened? What happened? Just look at this. Just look at this beautiful trade. A beautiful trade. Let's see. You can enter from here. You can also enter from fair value gap, but it's more safer if you have large funds. It's more safer to enter from the fair value gap because most times BTC doesn't really respect order blocks like that. So they respect more of breaker blocks and fair value gap. So let's just take our trade from here, then put our SL here on our low. You can even extend it based on your strength, but yeah, you can leave it here. Then what? Extend it to the previous high, and you are good to go. You are good to go. You are good to go. 3RR is done. You've gotten your reward ratio. You've reached 1, and you've gotten 3. So I'm going to be talking about risk to reward when we've reached risk management and all that. But let's just know how to enter and exit trades using valid zones. I've covered a lot on this already. We've covered a lot on this. So I think we are done with 1 day. We are done with 4 hours. Now let's try other pairs. Then I'm going to show you the 1 hour and probably 15 minutes so that you know that it works everywhere. Let's just go to I think night has started, like it's getting late now and the network is getting slower. So let's just try and cover as much as we can before we exit. Everybody should go to his divers, please. Um. Okay. Let's see for our yeah 4 hour. Let's check 4 hour. Then we'll go to 1 hour. I don't want us to waste time, too much time on this. This is very explanatory. Um. Let's go to gold. Yeah, okay, we are looking at gold. On our 4 hours, we saw a break of structure. First break of structure. Then what? A second break of structure. Then what happened? A low. Then the market swept the low and went towards another block. For you to know that the other block is valid, there was a fair value gap here. There was a fair value gap here. There was definitely a fair value gap here. Very tiny. So this fair value gap validates this other block zone. It shows that this other block is valid. So you enter from here and you set your SL here, then your target to the previous high. Let's go to 1 hour and see whether we can spot a similar scenario. So now you can also spot a similar scenario on your 1 hour. You can spot it on your 1 hour. Here is it. Multiple scenarios. So now on our 1 hour, what did the market do? The market broke structure like 2 times. First break of structure, second break of structure, then went up. So what are we expecting? We are expecting the market to still come down after breaking two structures. We are expecting the market to come down and do what? And sweep this low of the second break of structure. Then what? After sweeping this low, then what? Tap into a valid order block, which is this one. A valid order block. Although the fair value gap was already mitigated and it was already, but the zone is still strong because of what? Because the order block is still sited near a breaker block. Another block is still sited near a breaker block, which validates the zone and makes the zone stronger. So that's the reason why the trade was orders were distributed aggressively on this zone, because there's a breaker block. So let's look at the 15 minutes. I'm just trying to prove the fact that these things work regardless of the time frame. This thing works. It works regardless of the time frame. So now you can see now on this trade now, there's something that happens. For those people that want to go into trading gold, you should understand this. Gold doesn't usually respect your instructions or your confluence. What gold does was it looks for a zone that orders are expected to be distributed, and it taps on it, and regardless of whether it has created any inducement liquidity or engineered liquidity or it has broken structure twice, it doesn't care. As far as your zone it has accumulated orders, it will distribute. So now what happened? The market broke structure here and went to the upside and did what? And came down and didn't break structure the second time. It didn't break structure the second time according to our rules. What did it did? It did what? It engineered a liquidity first before sweeping it, because we said after two break of structure we're expecting a liquidity. So it didn't break structure the second time. What it did was it did like it wants to break structure. After breaking this first structure, it did like this, went down, and did like it wants to break structure and refused to break structure and went down again. It did like it wants to break structure and refused to break structure. Then what? It went and took out these two lows. It went and took out these two lows. Some people will call this double bottom. Some people will call this double bottom. So it went and took these two equal lows, which were which are also called engineered liquidity. It created an engineered liquidity because why do we call it engineered liquidity? Because it tricked early buyers to buy from this place and went up and reversed again and cleared these people that entered early. In fact, this is the first people went up. I'm coming. Let me show you something. These lows are even more than two. Let me show you something. Let me show you this first low. This is the first low. Created the first low here, went up, refused to break structure, and created another second low here. Refused to break structure, went up, refused to break structure, and create another low here. Refused to break structure, went up, refused to break structure. It also went down again and went up again and refused to break structure. So this is the last going down that it did. After it went down, it swept all the three lows. Swept all the three lows. Swept all the three lows, which is what we call liquidity. It liquidates all the three people, the early buyers that bought from this zone. All of them. So after you've seen something like this, just look at another block, a negative candle here, then what's also our breaker block here, then you just take your trade. You just know that this trade is an A plus setup. Just know if you see something like this, just know that yes, this is a nice trade. So I'm just trying to show you the psychology behind trading gold. So we are done with this. So I don't know. I don't think we need to go to Euro USD. I've shown you a lot of examples already. It's left for you guys to. I think I will give you an example. I'll give you an assignment. It's been a while. It's been a while. I actually gave you guys an assignment. I'll give you an assignment to identify valid zones on Euro USD. At least 3 valid zones that were respected, and I label them the way I label mine. Then submit them at least before our next class. So thank you guys for sticking around. If you have any question, please do let me know. Do let me know. If there is no question, or if you don't want to ask it now, you can still chat me up on my DM. You can chat me up on WhatsApp. I will reply you guys. So I'll give you guys room for questions. If you have questions, please just write it down just type it on the group and I'll answer. Thank you.